Let's get across the market open. Kyle Rodder joining us from Capital.com. Kyle, welcome back. Good to see you again as we get this Wednesday going. Let's start in the States. Some further concerning signs, I guess, what we're seeing in the data there. Perhaps signs of stagflationary conditions emerging there with manufacturing contracting and inflation moving higher.
Yeah, it's sort of looking like a slight stagflationary light scenario unfolding. I mean, obviously, all of this is being generated by the uncertainty surrounding trade policy and then also the impacts of existing tariffs on the US economy. That PMI data, while not sort of flashing an imminent signal of a contraction in US growth, certainly had all the hallmarks of a fairly significant weakening of demand. Inputs dropped quite significantly. Employment and investment intentions are obviously waning. And at the same time, we're seeing the input prices jump quite significantly, which really does sort of crystallize the idea that we are moving into an environment where demand or economic activity is going to slow, but maybe that won't necessarily come with the level of weakness in prices, which allows policymakers, especially the Fed, to be able to support the economy with interest rate cuts. So that was the first part of the night's trade, and it sort of sparked a little bit of a sell-off in equities. By the end of trade, it became much more about speculation about the tariff announcement tomorrow. But certainly, if nothing else, we are looking now at a probable contraction in economic activity for the quarter in the United States. And again, these sort of heightened concerns we might be heading towards a recession.
Yeah, in fact, interesting, so much speculation about what Donald Trump is going to reveal. Reports out of the Washington Post saying he's drafting a proposal to impose tariffs around 20% on all imports into the States. But once again, investors, markets, just on hold at the moment until they get some definitive detail.
Yeah, and based on what are effectively the leaks coming from the White House is that things haven't been finalised yet. So there's still a sense that the situation is very fluid and anything could happen from here. Obviously at the start of the week, the Wall Street Journal was reporting that, one of the plans was effectively a universal 20% tariff on every trading partner. And that's, a part of the reason why we saw such weakness coming through Wall Street at the start of the week, on top of, the PCE data on Friday night, was that, that would be very significant, would mark a massive increase in US tariffs to levels that we haven't seen possibly in the last century or so. As we've just been noting before, that would, continue to put downward pressure on growth and upward pressure on prices, at least in the short term. There was some reprieve throughout the session because other outlets were reporting that, either there would be sort of concessions, either the tariffs would be more based on sort of matching existing imposts imposed on the United States. And there might even be for certain trading partners a kind of concessionary level of tariffs that is sort of lower than that kind of broader 20% that could be applied to some other trading partners, opening the prospect of sort of not the worst case scenario not coming to fruition, and that maybe there's some kind of leeway there that trading partners can negotiate better trading terms, more favourable terms, and of course that kind of indicating that maybe the worst won't come to pass. But this kind of price action that we are seeing and have been seeing over the last couple of days is very much indicative of a volatile market, and one that continues to be sort of racked by fears of fear itself, I suppose, to draw on some comments or the famous quote from Roosevelt at the start of the Great Depression. That's kind of the real key dynamic here. A lot is to be unpacked from these trade measures, but if nothing else, the markets are potentially pricing in that there won't be the worst case scenario. Of course, that does mean that tomorrow, if we do get the worst case scenario, that will come with a fairly significant, downside shock to equity markets.
And also got some key data job-wise this week as well, capped off with the non-farm payrolls.
Yeah, and that's going to be interesting because it's probably the first set of numbers that we're going to get that actually captures some of the public sector layoffs that have occurred since the start of the administration, the Trump administration. And as a result, the kind of potential deterioration in economic activity and economic fundamentals that could be plaguing the economy. Not to mention too that last night we did have the JOLTS numbers show that job openings were lower than expected. And if you look at the sort of subtext of a lot of the comments made by survey respondents in the PMI survey, hiring, although isn't sort of marked by significant layoffs, hiring is more or less stopped, and there's kind of like this slow attrition in the labour market as this uncertainty around trade policy stops businesses from putting people on. So the actual expectations for the NFP's data is actually for a fairly robust print. I think about 150,000 is the current consensus estimate. That probably has changed over the last 24 to 48 hours, and a steady unemployment rate. But if you do look at options markets, you're looking at implied volatility being fairly heightened. So it says that markets aren't that confident necessarily in predicting what this number will be. And again, arguably could even be more significant than the eventual trade announcement if it starts to show that genuine cracks are appearing in the US economy.
Kyle, what should we expect for the Asian session?
Well, it looks like futures are pointing to a positive open, so we're sort of going to sort of follow through, at least at the ASX 300, with that late rally that we saw on Wall Street. You might be looking at tech stocks and things of that nature because it was led by the Nasdaq, up by about 1% by the end of the session. I mean, I would imagine it's going to be fairly choppy. There's every chance that we'll continue to see headlines coming through and leaks effectively from the White House going into tomorrow's announcement, about what it could be, and that could lead to some fairly significant intraday volatility. But for the most part, I think there will be this level of cautiousness. We get the announcement in the Rose Garden tomorrow at about 6 a.m. our time, so we're going to be pretty much seeing the last hour of US trade, being dictated by that news. As well as that will sort of be something that we wake up to and have to digest very early in the morning. So it's very much going to be clouded by those expectations. So positive open, it would seem, a slight relief rally, but nothing to really bank on. And again, it's a very, very heightened environment for headline risk, which could more or less drive the day's price action.